Welcome to 10lessons.net, how to trade like a professional. First of all, our disclaimer, do your own research. Our content is intended to be used and must be used for information and educational purposes only. So it's very important to do your own analysis before making any investment decisions. 10 lessons, as the name suggests, there are 10 lessons. The first lesson today, which we're going to go on to in a minute, is learn what a trend is, how to use professional tools which tell you where the price is going next. All tools are leading indicators. Learn how to understand and support resistance areas, pivots and Fibonacci's. Really important lesson. Number 2, divergence, what it means, how to use it to your advantage. Really important for exits, entries, and controlling your positions. How to understand swing trades. This is important, really, really important, because quite often during a trend, the price has to rest and come down to some important areas. It's another way of getting into the trade. Discover tools that confirm oversold or overbought conditions. Vital for your entry. Managing a live trade, how to use the key elements and put them together. Discover the best time frames to use for maximum profit. This is vital. Many people get this wrong. Learn how to use stops and trailing stops to maximize profits and reduce risks. A system that understands correlation. This is vital and key for everybody. If you don't understand correlation, then you are in trouble. So we show you that and show you how to use the tools. Compounding, this is the key to tools to growing your account exponentially. Show you that and do it in a safe manner. So on to lesson 1. This is the chart. I mean, in the ebook, we were non-specific about what moving averages we use. We're just talking generically, but now we come on to the detail. This is where we get the nuts and bolts out there. So this is a pound Swiss, 125.16. Doesn't really matter. But anyway, so now we're going to plot some key indicators, in fact moving averages to start with, to give us an idea of where the trend is and where the price is going next in advance. Okay, so let's do that. Now we're using FXCM, but doesn't really matter what you use, as long as you've got a decent chart package. So the first one we're going to put it in the 200 moving average. I like quite a bold line, and I like it in black. Choose whatever colour you like, doesn't matter. Your preference. So there we have it, the 200-day moving average. My drawing tools. Whenever we see the price moving above, then we can safely say that the price is going to be strong. Let's add another. The next one is the 50 EMA. I quite like that colour. That's fine, quite bold. So what we're looking for here as a safe entry is whenever the price moves above the 50-day moving average, then we are looking to enter. Let's add another element, key element to the trend. Now this is a stochastic. We use a slow cost stochastic. 14, 7 and 3. I quite like the lines to be bold. So let's have a look at that and see how that looks. So you can see, very simple, but very, very effective, very powerful. We're not waiting for golden crosses or anything like that. We're just simply waiting for the price to move above the blue line. But we want safe entries, don't we? So for instance, here, 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 and so on. You get the picture. Whenever the price is overbought, in an uptrend, this is not a safe entry. What's likely to happen is you're going to see a pullback of entries. As soon as you get in it, it will so you've got a 78 pip, 84 pip pullback there, 86 pip pullback there, 86, 89 pip pullback there. So you get the picture. We don't want to enter at a point where your price is going to come against you, because unless you have 150 pip stop, then now where's the safe entry? You've probably seen it already. Okay, here. So you get the picture. Fairly straightforward, I think. Fairly straightforward. Now, of course, it gets more complex, hence the 10 lessons. Get rid of those. Now, the other thing that I mentioned in the beginning was how to reduce your risks by 50%. This is really, really important. You've got to think long term here. Let me go to the US Canadian as an example. So in this example, we can see that the blue line is below the black line. So this is a downtrend generally. Get a bit closer. But we don't want to sell it. We do not sell markets. Simple as that. We only look for buys. And this shortens the analysis time as well. So immediately as I see something's falling down, I don't want to know. There is a correlation between all markets, and that's where your opportunity is. Wherever there's a sell on the US Canadian, there will be a buy on the Aussie USD. So we would look to buy on the USD. So here, there is a buying opportunity. There's a buying opportunity here, which we had. I think we had quite a few pips on that. Now, which time frames to use? This is a 4-hour chart. Let's go to the 1 day chart on the Aussie USD. We use the same indicators on every chart. I like 3 months of data. So this is the Aussie USD. We can see that the price is above the blue line. It's above the 200-day moving average, which is strong. And there's a nice save entry here. Now, I'm not worried about the stochastic on the daily. I'm only on a safe entry on the 4-hour. But this is a good example of what it actually looks like. So we use the daily, we use the 4-hour, and then we use the 1 hour if you don't really need the 1 hour, to be honest. So there's 3 time frames we look at, and we can see that the price is moved above the blue line, indicating a potential upward surge. Well, that's the end of this lesson 1. I hope you find this helpful. This is just the start of your journey. The next lesson 2 deals with support, resistance, pivots, Fibonacci's, all that kind of thing. Thank you for joining us, and I hope you enjoy it. And if you have any questions, contact us on info@10lessons.net.